Welcome back. The big stock to watch today will be Reliance Industries. It was a strong showing by Reliance Industries in Q4. The oils to chemicals business was the star performer. Jio also met street expectations. Retail was a bit of a miss, but then it was the Omicron quarter, so perhaps on expected lines. Devin Choksi of KR Choksi, Balaji Subramaniam, the Vice President at IFL Securities, who will be talking about the Jio performance, and Prakash Diwan join us to understand Reliance's numbers and the way forward for the stock. Devin, morning, and thanks so much for joining in. Well, the numbers are good, but is there anything in the numbers to drive an outperformance from here on, considering the stock has already had a strong showing in the last few months?
Yeah, good morning. Well, I believe that I think few of the important triggers which are happening and that is resulting or likely to result into outperformance. Let us count one by one. One important aspect, I think, in April to June quarter of the current financial year, we are likely to see the influence of higher amount of GRM, Singapore GRM, in the margins of Reliance, and basically because of the fact that they are exporting and that the export refinery is basically exporting to the European region, is resulting into higher amount of realization for them. In my viewpoint, I think given the current GRMs that they stand increase, I think as far as their EBITDA is concerned, around $1 to $1.5 billion on an annualized basis as far as the incremental profits is concerned. So that is one important strong point which I believe in the refining business that company will probably report going forward. The other important point is in the Jio platform. Jio platform has already registered EBITDA of to 10,500 crores on a quarterly basis, which promises to score above, I think, 50,000 crore annualized EBITDA going forward in the current financial year. And most importantly, it is the first quarter in which we have seen the positive ARPU effect, I think, coming in, which I believe, I think, could possibly result into higher amount of numbers for the Jio platform. The Jio platform probably registers a very strong case after the refining, as far as I think larger amount of EBITDA contribution is concerned into the balance sheet of the company. Third most important point, I think, where I believe the company is likely to continue higher profit is going to be in retail business. In retail business, given the strategy that the company has adopted, particularly into the fashion apparels, of acquiring brands and investing stake into different brands, I believe that I think they are likely to show relatively higher amount of profit margin. And I think that's where probably 20% plus kind of a growth can be seen in the profit performance of retail business. And last but not the least, I think the kind of build-up that they are doing in the area of the new energy business with different technology blocks that they are adding into different kind of business types that they're making, some kind of acquisitions that they're making in each of the areas. I believe is going to be potentially a high growth driver, though it may not have much effect in the current financial year 22-23. But I believe that I think it's going to have a larger impact going forward, given the kind of business enterprise that they're building out of these acquisitions.
Okay, all right, got that, Devin. Well, let's get in Prakash Diwan as well into the conversation. Morning, Prakash. Well, what do you make of the numbers? You know, Reliance has become so important. If it wasn't for Reliance Industries in the last couple of months, the way the stock has moved, well, we could have very well been 300-400 points lower even from the Nifty itself. But what do you make of the numbers?
Good morning, Nigel. So I do agree, you know, while Reliance has done the heavy lifting in the last month or so for the market, even after this appreciation that we've seen in the recent weeks, I think there's much more to go. And I would corroborate with what Devin pointed out. So I won't repeat a lot of those things. But, you know, what I liked about the numbers was that Jio has come to a stage where the margins have been so healthy. And this is just after that one price hike that you saw. So the ARPUs have surprised very pleasantly. And Rima, along with you, and she can tell you how, you know, this could continue to do well once the subscriber addition comes back to a normal pace. Right now, they've done a bit of SIM consolidation, and that's exactly why you see these numbers come down. But once the net subscriber addition is positive, you'll probably see a much bigger contribution from that. And retail, where they've been investing a lot of capital, and that's why, you know, it probably seems that the Omicron impact is put it down. It's something where they will be able to reap and harvest much later. So, you know, right now it's in an investing phase, the brand acquisitions, the kind of formats that they've been doing, the new product portfolio enhancement, all of that will start doing well. So, and of course, we know how well O2C is doing. So that will continue to be robust enough for the current quarter as well. So I think there is definitely some upside, at least about 8-10% upside for the stock to be fairly valued from here on. And that's in a scenario where ETFs are actually pulling out. Once the ETFs come back, you know what can happen. So very positive on the results and the stocks.
Balaji Subramaniam of IIFL is also with us. Balaji, you look at Reliance Jio very closely, and the two triggers from a stock market point of view. One will be when the subscriber decline, the decline in the subscriber base will come to an end. And secondly, what is the plan with respect to 5G and the capital allocation? What was the management commentary on these 2 points in the conference call, and your thoughts?
Hi, good morning. Just to comment on the quarter's performance, I think 8% QOQ revenue growth was quite healthy. And what is also encouraging is that the data traffic was up sequentially by 5% despite the fact that the tariff hikes were there. And people also starting to work from offices. So in a way, it does suggest that data has become a basic necessity, and we are probably not going to see a lot of down trading even in the face of tariff hikes. So it's a positive development for the industry. And to your two questions, firstly on the subscriber base, so Jio has been cleaning up its subscriber base for the past few months. And if you look at the VLR ratio that TRAI puts out, it was about 79%, which is the proportion of active subscribers, 79% in August 2021. As of Feb 2022, it has gone to about 94%. So since 94% is quite high, we are probably closer to the tail end of the subscriber cleanup that Jio has been doing. And I think it's only a matter of maybe 1 or 2 months before we start seeing Jio reporting net adds. And actually, based on what Jio put out as its subscriber numbers and what TRAI put out as of end of February, it does seem that in March itself they did see 1 odd million positive net adds. Regarding 5G auctions, I think we will get more clarity once the current back and forth exercise between the DCC and TRAI gets complete. And we will also get more clarity on what exactly is the final quantum of spectrum that is going to be auctioned, and more importantly, what would be the spectrum usage charges on the auction on the spectrum that would be auctioned in the coming months. So I think one should probably wait for the NIA which DOT puts out, which I think should be in a matter of maybe 3-4 weeks. That will probably hold more color as to what the industry is going to do with respect to purchase of 5G spectrum.
Right. That's very well put. Balaji, thank you very much for joining us. Devin, thank you very much for joining us on Reliance this morning. Appreciate both of you joining us with that. Prakash Diwan stays with us. Prakash, so what about the market itself? I mean, how are things looking? We're going to start lower, another down day to begin with. And generally, I mean, if you look at the global landscape, it is looking tough. Most things are under pressure. Your thoughts, near term?
Good morning, Prashant. So yeah, I do agree. Barring some of these flashes that we saw in earnings and some triggers like the Mindtree LTI merger, there's nothing much to perk up the market at this moment. This morning seems to be a handover from the weakness in the global cues, and especially the US markets. Because very clearly we have still been trading at premiums, and that premium could come off gradually. So the grind is slow, but look at where we are from 17,200 odd, we are at 16,200 odd. And this 1,000 points of loss or reduction has been a very slow grind. Though on days you've seen the Nifty do 270 points, 200 points very often, but it's not attributable to any particular fall in certain pockets or sectors. My sense is you will start seeing value emerge at lower levels. Cyclically, there will be rotationally, there will be more sectors that will see weakness. We've seen banking, we've seen IT, we've seen FMCG. We continue to see that in chemicals now. So the premium chemical valuations that come off. So I think as a strategy, what one needs to do is wait for value to emerge in some of these pockets and then start building the portfolio. And mind you, there's a lot of cash sitting with HNI, with PMS managers and all. So there could be money coming in at lower levels. But global cues don't give you anything to look forward to at this moment, where you would see some sort of a reversal in FI mood flow or something. So that's the whole point. It might pay to stay out of the market for a while. That is what my gut feels.
Prakash, getting a bit stock specific, any standout earnings print over the weekend as well as what we had from post Friday evening?
Reema, there has been a very mixed kind of a thing. So let's look at a company like Tata Power. A very fancied, well-valued stock, well-discovered stock. If you look at the earnings, while it very clearly tells you that there has been a great positive move on the solar side, and the solar side has started kind of getting some sort of a reckoning within the company's operational metrics. It's a conventional power side which has been a bit let down. So, results have been also positive or favorable, but not to that wholehearted convincing effort. So honestly, this weekend has been fairly tepid in terms of, except for Reliance, I don't see anything which has been a standout. And some of the smaller names where this has happened are too small at this moment to be lapped up by the market, given the level of activity that's there. And retail is also kind of waning off. If you see the flows right now. So while the institutions take a back seat, particularly FIs, even the retail is probably after the LIC IPO might take some time to pause and re-look at things. But otherwise, I think as I said, I would still go with infrastructure, old economy stocks, Coal India, gas businesses like Gas Authority. Those are pockets that I would still allocate more money to in this drop.
Look at the value pocket, Prakash. But what about ITC? Even in a downtrending market on Friday, smoking hot. The stock ended high with a gain, I think, of around 1.5% to around 2% odd, and that's really come back to life. But at around 265 rupees odd, what would you do with it? Would you make a fresh entry or would you wait for a bit of a dip?
No, I would reckon, Nigel, I would stick my neck out and still add to ITC for the simple reason, operationally, there's no letdown in the performance. While we've seen how a lot of the FMCG companies which are dependent on oil imports, particularly from the palm oil side, have got impacted. Packaging costs have gone up. ITC has probably managed to stay afloat because of the product mix and the positioning that it has, right? The premium positioning that it has. It doesn't cater to the same segment as a Britannia would or a Marico. So from that perspective, it still has its own listing and it's under-owned. There's no question of people selling out at these levels of booking out in a rush. So I would believe that it will probably be the go-to stock as far as an allocation is concerned for FMCG as a sector. And the dividend capability continues to attract people who like that kind of thing. So it's time for value investing, and ITC probably represents that as a classic example. I believe it will probably still has legs, maybe not very rapid, but I would be surprised if it inches towards the 300 mark over a period of time over the next few months.
All right, Prakash, you stay with us. For the time being, though, we'll slip into that short break. When you come back, Mitesh Thakkar as well as Sudarshan Sukhani